few other people help organize, one being Madison over here in the back corner. Many of you have seen her before in previous events. We have a new co-organizer who's helping us out, Ross, here in the back corner as well. You might be seeing him on a semi-regular basis. I don't think Chris is out here today, though. I guess Chris couldn't make it today, who's one of the longest standing organizers who's been helping out with this meetup now for, gosh, almost 10 years. So thanks for coming out. Excited about what we've got today. I'm actually looking forward to hearing a lot about these projects. We have Anthony here from Vela Exchange. He's going to kick it off. This is a perpetual DEX, is my understanding, with crazy leverage, if I'm not mistaken. And so this is something that interests us at a very strong level, given that Edge is a self-custody exchange platform, lets you buy, sell, and trade, and we're always looking at different protocols and evaluating protocols for integration. And one of our missions is to replace the centralized exchanges. From the start, obviously many people use centralized exchanges to just on-ramp. We want to get Bitcoin, we want to get Ethereum, maybe you have to sell it. Then after a while, they start using it for more fancy trading functionality, like maybe a limit order, a stop limit order. And then people start using it for really advanced functionality, such as what you're going to see in Vela. And really, they try to complete the picture and really help us get rid of the centralized alternatives. So I'm really excited to hear what's going on with Vela and how we could possibly use it. So with that, I'll kick it off to Anthony. Cool. Thanks a lot.
Thank you, Paul. Yeah. Thanks everyone. Appreciate the invite. Looking forward to sharing more with you guys about Vela, kind of about my journey to crypto. Actually, I'm going to start kind of with that and kind of what got me into this space. And yeah, I'll go into a lot of details around Vela and kind of my day-to-day. So I'm the Chief Operating Officer for Vela Exchange. So some of the challenges that I faced over the last 2 years kind of building this product. So just a quick agenda. So again, I'm going to start with a quick agenda or introduction of my journey and Vela as well. Then after that, get into like an overview of perps. So I don't know, do you guys know what perp, list of hands, like who knows what a perps DEX is? Okay, cool. So I'm trying to just gauge the audience. So a couple guys. So I'll go into, I'll try to do a bit of an overview there for you guys. And then once I get into that, I'm going to get into the meat of the presentation, which is going to be some of the key challenges that I faced, again, in my journey with Vela over the last couple of years. And then at the end, we'll have, I think, 5 or so minutes for Q&A. So. All right, so just a bit about me. So I try not to put a lot of text on my slides. I like pictures. I'm a very visual guy. So I kind of picked 3 images that I thought represented my kind of journey, right? So maybe some weird pictures there. Does anyone recognize the guy in the top left? Anyone? So I was a very weird kid, I'll put it that way. So rather than like superheroes and things that kids like for role models, my role model growing up was Richard Feynman. So that's Richard Feynman. So he was a Nobel laureate physicist. Why did I like him? He wasn't an ordinary physicist. He was a very curious fellow, loved to ask questions, very upbeat. One of the traits that I liked from him that I really tried to take in my career was his capability to basically address very complex topics and explain it very simply to anybody. So that's what I loved about Richard Feynman. And so I've really tried to emulate him in my career. So the next picture there is chess. So I'm a massive I love chess. I'm a big chess fan. What I like about chess is the strategy aspect of it, right? It's really the ultimate strategy game to me. And so, and kind of like a problem-solving game. And so again, that's something that I've really taken and used that towards in my crypto journey. Also, I kind of like to think of myself as that red pawn, right? So I've never been afraid to kind of take charge and lead a team essentially. That's something that I've taken a lot of pride on, is that kind of that leadership capability. The last picture there is, you can see a picture of a trader. So I actually started my trading journey about 5 or 6 years ago now. I actually traded semi-professionally for a prop firm. And you learn a lot trading for a prop firm. You kind of go in with certain expectations. The nice thing is that you actually get to trade other people's money, which is really fun, right? You're not risking your own money. But with that comes a lot of responsibility, right? So you can't just, a lot of traders, if you look on social media, on Twitter, for example, or X, you see these guys bragging about these big wins, right? But in reality, that's not what these professional firms care about. They don't care about your ROI. What they care about is your drawdown. How much risk are you taking, right? So that's a really key element actually that I learned through trading is risk management, something else that I brought to Vela, right? So all these things, and I had a long crazy twisting journey on my road to Vela. I actually started with crypto about just at the early COVID days actually. My job required me to work from home. I wasn't able to go out like most people. And so I started kind of playing in my free time, querying the blockchain. I have like an engineering background, so I was able to like do some coding and stuff like that. And I started to provide some insights and valuable information for this bridging project. And then through that, through networking and relationships, sort of like events like this, which is great, I was able to meet the founder of Vela, Travis Skewers, and he brought me onto the team, and I became COO. So, okay, so just a real high-level overview of what is a perp DEX, right? So, a perp is a type of derivative, futures contract. So, by derivative, I mean that you don't actually own the underlying asset, right? You basically, you trade a price, but it can be made up of anything. So you don't necessarily own the asset. Actually, you don't own the asset, right? So you can literally trade like, you can make up a price for anything really. Like you could trade the average price of bread. It doesn't even have to be like a traditional kind of asset that you think of, right? That you would trade. So that's one of the cool things about a perpetual DEX. But basically, you're speculating on the future price action of whatever asset, right? Underlying asset. And the nice thing with the perp, as opposed to like a traditional futures contract, is there's no expiration date. So you can hold the position indefinitely, and you don't have to worry about any expiration or having to roll over a contract, essentially. So the first big benefit of a perp contract is that you can use leverage, right? So Paul mentioned this early on when he introduced me. So with a perp, we actually offer up to 250x leverage. So what that means is like if I have $1,000 in capital, I can actually turn that into $250,000 position size, right? So what that does is it basically gives you a lot of upside potential, right? You can make a lot of money very quickly. Now with that, I personally don't use 250x leverage. I think that's crazy, but people like to do that. But with that that upside comes also a lot of risk, right? So in order to use that type of leverage, you obviously want to know what you're doing, so you don't lose all your money very quickly, which unfortunately does happen to a lot of folks, right? So that's kind of about one of the disclaimers is like, make sure you know what you're getting into before you start trading perps. Like there's a lot of education and a lot of resources I can recommend to you if you're interested in getting started. Just by a show of hands, I'm curious, who actually trades? Does anyone trade here, or has anyone traded? Okay, awesome. So yeah, we've all kind of dabbled, I think, into it a little bit. But to trade at a high level, you definitely need to have like a good plan, right? And you don't want to just like start throwing money at stuff, right? Typically, like you want to start paper trading or to practice before you really get into it. I always mention that because people will think they can do it, and it's much harder in practice than it is in theory, right? So the next thing is, DEX versus a CEX, right? So a decentralized exchange versus a centralized exchange. So Paul also talked about this briefly. We also believe in self-custody with Vela. That's why we built a DEX, or a decentralized exchange. Here, it may be hard to see. I apologize, it's a bit smaller graph. But basically what this is showing is like the ratio of DEX to CEX. This is spot volume trading, but basically perpetuals the chart looks very similar to this. You can kind of see here, this is about 3 or 4 years ago. We were at like 0.01%. And now, this is as of May of 2023, it was at like 20% of the trade volume. So, it's substantially picking up. That you can see that trend is definitely increasing. And we expect that trend to continue as people, are losing trust in using CEXs, right? If you think back to the whole SBF, FTX fiasco of about a year ago, a lot of people lost a lot of money there. And I think it really showed the importance of self-custody, right? And that decentralization aspect. The last thing to know is there's 2 different main types of perpetual DEXs. So there's an Oracle-based DEX, and there's an order book-based DEX. So Vela Exchange uses an Oracle-based DEX. So I'll touch on that in a second. But with an order book, which is another very popular model that you'll see. So if you think of like the DYDXs of the world, right? They're one of the largest order-based perp DEXs. So the way that works is basically you have like a market maker that basically establishes liquidity on an order book, right? So they'll basically set a bunch of waiting orders that are just waiting to get filled by what are called takers, right? So they'll kind of eat up that liquidity. So you might have seen a chart like this, which is like like an order book graph, right? So it's showing you all the waiting buy orders and all the waiting sell orders, right? So you basically need a market maker to come in and push that liquidity onto the chain. with an Oracle-based DEX, which is what Vela has. So the way that works is basically the Oracle provider will basically aggregate all the pricing from a bunch of leading market providers like Binance's, for example, like some of the big exchanges, even from traditional finance, right? So basically people that will provide prices, and they'll push that on chain. So they come up with some logic that basically determines like what's a fair price based on like taking the median, for example, of a bunch of different prices. They put them together and they spit out the worst and the least, or the ones that like the outliers, and they'll basically push the price that's the most consistent or accurate over time. So before I get into the meat of the talk, which is really the 5 key challenges that I've had with Vela over the last 2 years, first I want to talk about some of the prerequisites that are kind of common amongst most crypto projects, I would say. Some of these are very, very important for PerpDex. The first one is a high quality team. So before we even started to build, we really looked for like some top talent and people that were like really motivated and passionate in this space that could really fill some gaps that I didn't have, or that Dan and Travis, our 2 co-founders, didn't have as well. So that was like design, marketing, those types of things. And we really wanted to put a group of guys together that like kind of could fill all those different skill sets and work really well together, right? One of the challenges with crypto is that everything is remote. That's why it's actually really nice to be here today, to see everyone in person and actually get to like network a little bit in person. It's awesome. I wish there was more of that in crypto. What's one of the difficulties is that we're all being remote, so there's an element of trust there as well, right? So you really want to get to know the people that you're working with, so you can trust them, that they're going to do their job. A strong community. So this is another really important element that we take very seriously at Vela. We always want to make sure that the community is heard, right? I think, especially in crypto, you're really only as strong as your community. And so you want to give them an avenue to provide feedback to the projects. We also have a ticketing system, so they can actually create a ticket, provide their feedback, concerns, whatever that may be. And we have a program in place to make sure that we respond to our customers within, at least at the most 24 hours, basically. So we always want to show them that they're involved and like they have a say in terms of the direction of the project as well, right? It's not just us in a bubble making these decisions. Robust infrastructure. So this is a really important thing for a trading platform. So as you can imagine, for trading, you want very low latency, high reliability infrastructure, right? So when a trader expects when they place a trade, that trade is going to fill immediately, right? And they're not going to wait. They're not going to have to wait for for our servers to respond or whatever. We want that to be very, very robust. And so this isn't my cup of tea, not my expertise necessarily, but we have a team that's dedicated to making sure that we maintain a very high quality infrastructure. And the last thing is game theory. So I actually had tokenomics here initially, but I changed it to game theory. I think it's a little bit more relevant. Basically, you always want to make sure that you're incentivizing things appropriately. And it's actually very strategic. So tokenomics definitely plays a part of that, but there's a lot more pieces that kind of go into that as well. Yeah, there's a lot of thought that needs to go into this to make sure that you set things up appropriately before you even launch your token. So yeah.
Yeah, 99.99% of people don't do it.
Yes, exactly. So really critical. Okay, so now I'm going to get into kind of the meat of the presentation here. So this is the first challenge. So the first thing you really got to do when you're building a PerpDex is you got to bootstrap liquidity, right? So the reason is that Oracle-based DEXs require LP or liquidity in order to take the opposite sides of traders' positions. So if I'm a trader and I want to open up a $1,000 position on Bitcoin, the way, as opposed to an order-based DEX where there's a market maker that had liquidity waiting there, so they can basically take that liquidity. Now, in this case, in Oracle, the taker is the LP, right? So we require this liquidity in order to allow traders to take new positions, essentially, right? So the question is, how do you attract LP, right? We call it into our vault, right? That's where the LP lives. It's basically a contract, right? So one of the questions you have to ask is, okay, what kind of assets are you going to allow users to deposit for this LP, right? So in Vela's case, we actually currently we take USDC, which is a stablecoin. So we have a stablecoin only vault. A lot of other projects, you'll see they will offer, you can deposit things like BTC and ETH, for example, right? And what that does is it gives you a little bit more upside on that LP token, but again, higher risks, because if the market is tanking, for example, you could actually lose a lot of value. So our initial thoughts, at least, and we're kind of trying to stick to that plan, is we want a stablecoin vault that provides a very steady return for our LPers that are taking on risk by just providing that LP. So we need to incentivize them to do that. So the question is, how do you incentivize them to do this, right? We're a new project we just launched. How do you trust, or how do you garner the trust of people to deposit millions of dollars in liquidity that you need to operate this exchange? So what we did is we came up with this program called Hyper VLP. VLP is our liquidity token, like Vela LP. And the way it worked, it was just kind of like that, thinking about game theory, right? So everyone could deposit their liquidity at any point, right? Up to a certain timeline, sorry. And then basically they could redeem it at any time, but if they redeemed that liquidity, any of the rewards that they would have got by keeping that liquidity there were distributed to the rest of the people that provided liquidity, right? So basically what that means is, like, if, after say a few months, people, they want their cash back, whatever, for whatever reason, we don't not allow them to do that. We want them to have the flexibility to remove that liquidity if they want to, but there's a punishment to do so. And the more people that remove their liquidity, the bigger the benefit is for everybody else that sticks with it, right? So you kind of reach this point where it doesn't make any sense to withdraw, because the benefits, the rewards that we're offering, which in this case is Vela, far exceed the basically not doing that. So this program actually turned out to be a very good success. We were actually able to, during our beta, we actually had over 50 million in liquidity. That was back in January. So it actually worked out very, very well for us. Okay, so the next step is, once you've actually got that initial liquidity, the next step is, like, how do you protect that for the investors, and how do you grow that over time, right? So this is where I spend most of my days, is trying to brainstorm new models. I'm always looking out at the ecosystem and trying to understand what different projects are doing, right? What's new and innovative. But the very first thing is balancing open interest. So open interest basically means, like, if you think the asset price is going to go up, that means you're going to long the asset. And if you think the asset's going to go down in value, then you're going to short, right? So you can long or you can short as a trader. And so say there's like $100 in longs and there's $50 in shorts. That means that there's a net skew in balance of $50 long. And that net balance is basically a direct risk to the vault, right? Because now all of a sudden, if you could imagine if someone opened like $1 million Bitcoin position, but there's 0 shorts to balance it out, now the vault is at risk of $1 million. If Bitcoin goes up by 100% tomorrow, that hit, because if you recall, the vault is basically taking the opposite side of the trader's position. So now the vault is going to take that massive hit, right? So it's very critical that we put mechanisms in place to be able to balance that OI as organically as possible. And the method that we've come up with to do that is something that we've called a velocity-based funding rate model. So essentially what that means is that there's a funding rate. So if the funding rate is positive, that means like longs will pay, and anyone that's short will basically earn those funding fees. And if the funding rate is negative, longs will pay, and longs will make money, and then shorts will pay money, right? So what we see happen is that when the funding rate gets high enough, we allow farming arbitrage. So we'll keep that funding rate high enough, long enough, so that people can do arbitrage. So basically, for example, if there's a net long position on Bitcoin on our exchange, and we want them to balance by taking an equal and opposite short position, we allow them to take that short, and then they can go to another exchange, whether it's a decentralized exchange or a centralized exchange, and they can take a long position, so they have a delta neutral position, right? And in the meantime, what they're doing is they're raking in those funding fees, right? So that's the idea. So they can basically have essentially 0 risk for the most part, and basically start earning funding fees by doing this farming arbitrage. So we've tried to set up our model so that these, you can call them market makers or farming arbitragers, they basically can take advantage of this mechanism. The next big thing is risk. There's other risk mitigation things as well that we can do. So another big one is OI limits, or open interest limits. So if we only have, say, 10 million in TVL in the vault, we don't want to allow a trader to take on a $10 million Bitcoin position. That'd be very foolish. Bitcoin goes up just a little bit percentage-wise, the vault will lose everything very quickly. So you can only have enough open interest on the exchange. It can never exceed the TVL in your vault, essentially, right? But not only that, you also you have to be much more cautious than that, right? So typically you never want to see like a net open interest more than 10% of your TVL, right? So we have limitations like that in order to protect the LPers. Another risk mitigation mechanism that we utilize is P&L. So we'll put limits on P&L as a function of the vault liquidity, right? So for example, we never want a trader can never make more than say 5% of the liquidity, right? And so we have rules like that, and typically like that'll never be met, but we have it just in case. There's some amazing traders out there, and we don't want them to like take all that liquidity, right? And so what we'll do is we'll basically start to deleverage their position until basically they have like a zero position left, right? We actually haven't dealt with this yet, but going into a bull run, this is something that may come into play. Just another layer of protection that we have. But the big thing is always like, if you think about it this way, the vault is sort of like the casino, right? Traders are going to win, traders are going to lose over time. For the most part, over the long run, over many samples, over many trades, they will typically lose over time. But you can definitely go through periods where they're going to win, right? And so we have another mechanism in place, which is fees, right? So in order to run the project, we need to charge fees to traders for opening a position. I talked about funding fees, right? That's another type of fees. We also have small borrow fees as well, just for like, so they can't keep a position open for, for a year. You have to pay a little borrowing fee on top of that as well. Again, these are all things that we put in place in order to protect our LP. Reliable pricing oracles. So this is really critical. So we actually have partnered with Pith. They've been amazing partners to us. They offer a ton of different assets that we can list on our exchange. And we definitely work with them. If we're interested in adding a new asset, we'll work with them, and they typically are very willing to work with us on that kind of thing. The reason oracles are so important is because if the oracles aren't very, very reliable and accurate, traders can exploit that very easily and essentially open and close a position immediately for example, you might see a big jump in price. You've probably seen this on certain centralized exchanges where you'll see a massive jump in price, like a scam wick, for example. And you want that to be real, because if it's not, a trader will take advantage of that all day long, and you can make hundreds of thousands of dollars very quickly, and that would wipe out the vault. So oracles are extremely important to not allow that to happen, or reliable oracles, I should say. The next thing is basically filtering out which assets we're going to list. So I show here Ethereum and Bitcoin. Those are two of the top traded assets, the most traded assets in crypto. We have a bunch of crypto assets that we list, but we also do forex and we do metals as well. The thing with this is you don't want to just list any old asset. You have to be really careful what you list. You want to make sure that it has high liquidity, right? So basically the price cannot be manipulated easily, right? What you don't want is someone going on a CEX and opening a trade on like some shitcoin that they can easily bump up the price by 50%, and then they come on our exchange and they take a long, right? And they can exploit us that way. So we have to be very cautious in terms of which assets we list. They have to be very high liquidity, high market depth of market on these CEXs, so they can't be exploited that way. And then finally, security standards are super critical, right? So we make sure that obviously we're audited. We have multiple audits on our smart contracts. For our personnel, we have like high standards around like two-factor authentication. We have basically a document for all of our employees that they have to follow in terms of like a dedicated work computer that's to be only used for work. Like we take that very seriously. You see a lot of the hacks nowadays are due to social engineering, right? Someone will click on a wrong link, for example. That happens way too often, and we're doing everything we possibly can to educate our team and to make sure that they follow our standards that we've laid out. And it's really like, if you break that rule, you're out. Like, we take that super, super seriously. So what I've shown here is like, what we're trying to achieve in the next few months. So we have some mechanisms that we're going to be introducing. I can't give the details right now, but basically we're very confident that we're going to be able to hit like a 20% APR growth for our VLP, for our LP pool. So you can imagine like, deposit your stable coins like USDC and receive a 20% APR. And not only that, if you remember at the beginning, I talked about how in trading it's super critical that it's not just about return, right? Because you might see 50% returns, 100% returns, some crazy returns in crypto. You see a bunch of crazy stuff. But what's more important to me, and I think to large investors, is that drawdown, right? You want to minimize drawdown. So that's really what we're going to be focusing on. is we want to get a 20% return, but we want to look more like this red curve here as opposed to the blue curve that's much more volatile, right? At the end of the day, they may achieve the same result, the same return at the end of the year, but I think that red curve gives much more confidence to investors, right, to invest in us. Because you don't want to lose 5%, even though it may be temporary. You don't know that, right? So that drawdown, reducing that volatility is really important. Okay, challenge number 3. So we've covered the liquidity. That's really the foundation for a perp DEX. The next thing is, if you don't have traders, what's the point, right? We're building a trading platform. So there's a few things here that are really important. So the first one, maybe not the most important, but I think this is where we've really excelled, I believe, in the last few months, is basically making it a really fun experience for traders, right? You have to try to differentiate yourself, right? There's a lot of great products out there, and I think this is where we've really differentiated ourselves, is like really with our UI and our UX, that whole experience for traders. So, for example, we just released, or we've had this campaign going on. We call it our Grand Prix. We have this black market, for example. So traders can basically, as they trade, they earn credits, and these credits essentially we're going to be offering rewards for based on. We have a leaderboard based on you can see here's our leaderboard, and these traders have compiled all these credits, and then at the end of every 2 weeks we basically provide rewards for the top 100 users that have the most credits, right? And the thing is, it's not just like we try to game it a little bit to make it a lot of fun. So we have these black market deals. So every 4 hours, there'll be a new deal pop up. For example, it'll be like, okay, Bitcoin is worth like 3x credits for the next 4 hours. So what you'll see is start to see a lot of traders like, yeah, I want to trade Bitcoin now, right? Or we'll say if you take a short position on any asset, you get 2x credits, right? So we're trying to make it a lot of fun, and we're actually getting a lot of engagement based on this strategy, and it's been awesome, really fun to see. But probably the more important things, really, like fundamentally speaking, like we have a very beautiful UI, I believe, and intuitive UX. So we brought in a new designer about 4 or 5 months ago, and he's done an amazing job transforming our platform. I think it looks very professional and sleek, and just very intuitive, right? You don't want to make you don't want to make it difficult for a trader to know what to do. Like if they want to set a limit order, for example, you want to make that as simple as possible and as intuitive as possible. And I think we've done a great job at that. Competitive fees, right? So, no one's going to trade on your platform if your fees are like 3 times what the next nearest competitor is. So it's really important that we have very competitive fees, but that has to be balanced out with protecting the LP, right? So you can't just like make them 0 because you need to like feed into that LP a little bit. So that's why things like that velocity-based funding model is really critical, because that allows us to kind of try to achieve a little bit of a balance there. Advanced features. So, just due to the time, I don't have a ton of time to go over a lot of the details here, but basically, like Paul mentioned earlier, we do offer like a lot of the kind of what you'd expect in a trading platform. So like limit orders, you can long and short. We also have like trailing stops, which is a fairly unique feature that we offer. We offer on-chart trading, so you can basically like drag and drop your orders, right? We have basically a technical analysis tool, so traders can like make all their technical analysis on their chart, and then they can save that for future. So when they come back, they can like load whatever technical analysis they did. So we have like a lot of really cool features like that. I definitely encourage you guys to log on to our app. I'll give you the information after in terms of how to log in. Not that you need to really trade a lot of volume or anything, but just test it out. I'd love to get your feedback and see what you think, good or bad. That's really what we're after, right? And then consistency and reliability. So if you set a stop loss, you want that stop loss to be hit and to trigger, right? You don't want the price to go way past it and then not trigger. That's a very frustrating experience. And so things like that, you want to make sure you're very consistent and reliable so the traders know what to expect day to day. Okay, challenge 4. So there's 5 challenges, so one more after this. So the 4th challenge is educating users on DeFi. This is actually a very big challenge, to be honest. One of the things that we've discovered, you kind of take it for granted if you've been in the space for a while. I remember when I sent my first transaction in crypto, I remember waiting for like a few minutes thinking, oh my God, did I just lose like $1,000 here? You don't know what you're doing, right? I think we tend to take that for granted. So it's really important to make that experience as seamless and intuitive as possible for the end user. So we really, we're looking at things like account abstraction, for example, right? So not even having to like create a wallet necessarily, like you log in through your Google account and we create the wallet for you, right? So there's a lot of cool tech that we're looking into that that will definitely help with that transition. And then, here's a picture of SBF. I'm sure a lot of you guys remember the whole FTX thing. That was a massive ordeal. Definitely a black eye on the space for sure. But what that really showed was that, you can't necessarily just trust these CEXs, right? I think they're doing a better job now of like showing proof of funds and that sort of thing. But in essence, like I will only trade on a DEX now. I want to make sure I have self-custody and I control my funds at all time. To me, that's like very important. And I think we're starting to see a lot of traders kind of get those same values, right? Like they care about decentralization, they care about self-custody. The last challenge is continually innovating, right? So crypto, as you guys are all aware, I'm sure, moves extremely fast. So I come from like the corporate world and like, you'd work on a project for a year and like, it seemed like it moved like molasses once you get into crypto. It's amazing how fast things move and how quickly the tech advances. So, we always come up with our plan and our vision of what we want, 6 months, 12 months, 2 years down the road. But you always have to be willing to do a gut check and see, okay, like there's some new tech that just came out, right? Do we want to use this? Are our competitors using this? How do we stay competitive? How do we stay relevant, right? You always have to stay on top of your game. There's no like easy weeks, basically. I'll tell you that. Like every week, it's like, oh my God, there's this new competitor. What are they doing, right? Like there's so much action all the time. So you really have to stay on top of the market and really have a good pulse on what's happening. And then just planning ahead for the future. So again, like we have a vision, right? And we try to stick to that. But sometimes, you have to ask yourself, are you doing the right thing, right? Are you still making progress? And you have to ask those tough questions. And sometimes you have to be willing to change that plan a little bit, right? And that's even happened to us a few times already, right? Like we want to stick to that plan, but you can't always do that. Sometimes you just got to vary off that a little bit. So I think, 2024, we're super excited. I feel like we built the product. We have it in an amazing place right now. Yeah, I think now we're kind of working on like 4 and 5, right? Challenges 4 and 5. Getting more users to adopt the platform, to be willing to try it out and take that challenge. And what we found is that most people that go from a CEX to our DEX, they have an amazing experience, and we typically have very, very positive feedback. So we're trying to just continue on with that process. Yeah. So that's everything. Appreciate your guys' time. Is there any questions?
One sec, let's wait for the mic.
Hello, Mike. So you had mentioned about shitcoins and liquidity and whatnot. Do you plan to ever offer shitcoins with higher liquidity and higher market cap? Because things like Shiba and
Yep.
Pepe before it rugged,
Yep.
Obviously it would be very hard to manipulate that
Mm-hmm.
because the market cap and liquidity are just so high.
Yep.
Do you plan to offer those types of shitcoins in the future, or?
So we actually, great question. So we actually already do offer, we actually listed Pepe and Shiba both because they do have, fairly large liquidity, very hard to manipulate at this point, right? Now with saying that, they do have more risk mitigation around them, right? So in terms of like open interest limits, like I talked about, right? That's not the same as like a BTC or an ETH would be, but we actually do list them. Now, what we want to go a step further, right? So I talked about balancing open interest. That's really important because if you can imagine, if we could balance 100% of the time open interest, which is not easy to do, but in theory, at that point, if you have zero risk when your OI is balanced. So at that point, we could list a illiquid, shitcoin if we wanted to, but that assumes that your open interest is basically balanced 100% of the time, and you can't always just assume that. But yeah, we're always looking for ways to like list more new kind of exciting assets, right? But right now, I think we have about 20 crypto assets. We have 6 forex, and then we offer gold and silver. So we have about 30 odd assets right now that we offer to trade.
So when you mentioned that the first round of LP users came and you guys were able to raise 50 million, what were kind of some of those strategies that you used in order to like entice the community, get them aware of what you guys were doing in order to get like such a large amount of like TVL deposits for your vault?
Yeah, so I mean, a large part of that was like, we started, our campaign like 3-4 months in advance, right? Like marketing and that sort of thing, getting the word out. And so I think that was a big part of it, right? We had a lot of strategy into that piece, but I think just like the gamified version of this Hyper VLP really strung a chord with users. I think they really like thought it was a neat idea. It was something innovative. They hadn't seen it before. It was that, and then also combined with like, we also kind of got a little lucky, to be honest with you, in terms of like, we launched at that point, like Arbitrum was like really booming, and the DEXs was like the hot topic at that, or narrative at that point. So kind of everything kind of worked in our favor. To be completely frank, I never thought we would hit that. Like my expectations were much lower, and I would have been even happy then. So to hit that number was like definitely far exceeded my expectation. But yeah, I think it was a kind of the kind of all three of those things basically, right?
You mentioned that you're always looking for what asset to list and evaluating this, but it's a DEX. Who actually decides on what assets get listed, and how is that controlled?
Great question.
I'm most curious about the consensus of that protocol.
Yeah, so you're looking at the guy who ultimately decides on which asset we list. I do a deep dive into every asset. I mean, I go into a lot more details than I showed you guys here in terms of like risk profile for each asset. But a lot of it is actually community based, right? So we actually do polls with our community, and we say, hey, what would you guys like to see us list, right? And then we'll do like polls and stuff like that, and they'll give us a few options, and then I'll look at them and strongly consider each of them. And if they make sense and they kind of fit all our criteria, a lot of times that's how we've been listing our assets lately, right? So we're looking for just the other cool thing is with a perp DEX, like I mentioned, you don't have to trade like an actual like crypto asset, right? It could be anything. Like you could literally trade, crypto market cap would be a good example, right? Like you could track the market cap of for all of crypto, right? And you could literally trade that, right? That'd be probably very difficult to manipulate. So you could come up with very kind of creative ideas as well.
Could I jump in a question really quick? In the back? What's the logic behind not using USDT for liquidity?
So we used, at the time, so we used USDC.E, which is the bridge token, USDC token on Arbitrum. So we actually built our vault, though, so that it can take in any stablecoin, essentially. So we are looking at adding additional stablecoins in the near future, likely. But I guess the thought process around listing USDC initially was that it had a lot of liquidity on Arbitrum. That was basically the main criteria. Was just like it was very popular, had a lot of liquidity. So that was really the main thing. Yeah.
So I like the 20% APR for the LP providers, but like I was heavily involved last cycle, and the 18% for I believe Anchor Protocol or Luna or whatever obviously didn't work out once the bear market hit. So what are your plans to try to meet those expectations when the bear hits? Because I don't think 20% is sustainable during the cycles after full 4-year cycle.
Yeah, and that's fair. I mean, that's our goal. Whether we achieve that goal, we'll see. The number one thing for us, though, is not the ROI, like I mentioned. Like that's a goal for us. That's a target. But the number one thing is protecting downside risk, right? So if that 20% turns into 10% with minimum drawdown, low volatility, we'll probably be happy with that, considering it's a stablecoin vault. So again, we'll be announcing, I guess, within the next 1 to 2 months, likely, some of the mechanisms that we think that we can use to achieve that, while still protecting our LPs. Right? So I can't, unfortunately, go into a lot of detail just because we haven't announced anything publicly yet. But if you follow us on socials and myself even, eventually you'll find out what we have in mind.
All right, I think that's all the time for questions we have, just so we can get our next speaker up on stage. But everybody give Anthony a round of applause.
Thank you.
I'm sure he'll stick around for questions
Definitely.
afterwards.
Definitely, yeah.
All right. I'm going to go ahead and let Alex intro our next speaker, but I wanted to pop in and give a quick shout out to, you can go ahead and get started. Yeah. I wanted to give a quick shout out to our sponsors. So BitRefill is an awesome company. They allow you to sell your crypto instantly into gift cards. So you don't actually need to, well, if you use Edge, you can do it without KYC, which is pretty cool. So you can just use your crypto to live your life. And so BitRefill is one of our main sponsors. And they send us DoorDash gift cards every month to supply pizza and drinks for everybody. So DoorDash is great. Give them a try. And Edge, yeah, worth clapping for sure. And then another sponsor is Edge. So we provide the facility, and Paul kind of touched on a bit of our values. We're a self-custody, multi-asset exchange platform. We do really like to offer some DEX solutions for you to trade, so you're not using those centralized institutions. And lastly, our last sponsor is Coinstructive. They're your crypto PI team. So if you or somebody you know has been affected by fraud or a scam or anything like that in the crypto space, you can contact Chris, who is one of our co-organizers, and he can help, kind of track it down. He also educates the law enforcement and the politicians about crypto and the technology, because they're the ones making the decisions for us. Awesome. And then I'm going to intro Alex. This meetup is actually co-organized by the Offchain group, and Alex is the new chapter lead of that group. So yeah, Alex.
Hi guys, thank you very much to Edge for helping us organize our first event. I'm a serial entrepreneur, crypto enthusiast. I'm actually trying to create my first Web3 startup. And I thought one of the best ways was to connect with the local community, and that's why I basically became the chapter leader of Offchain, which is a global community available basically in every city in the world, pretty much. Here it was still not very strong, so I wanted to help it grow. And today I'm going to present you Trent Allen, who's the founder of FX1. So the way I came up with this event was the following. I came across FX1, this project that was showing two MMA fighters fighting against each other, and in real time, this algorithm, which was basically showing how many punches were thrown, how quickly they were, if the two fighters were getting tired. And I thought, this is interesting. I delved into it, and it's basically a sports betting, GambleFi Web3 startup, and they are actually contestants in the Killer Whales TV show. Killer Whales is the remake of Shark Tank, but for Web3 companies, who's been produced by Hello Labs, a Web3 entertainment and media company. Actually, the first episode just came out today, and I thought, okay, that's cool. And then I just saw Trent's profile on LinkedIn. He had published a blog article where he was sharing his experience in Web3 and the challenges he had, especially in launching their token. And I thought it would be a great way to learn from his experience. So, Trent, FX1.
We started building this business in late 2019. It's like 4 years ago, right? Over 4 years ago, long time. We started by raising money from friends and family, which is how most startups start, right? You can't make money straight away, so you go and raise money. And it's this terrible drug that you stay on for a while until you can make money yourself. So we raised money from friends and family. We raised just over $1 million, gave away some equity in return for it. But then something came that changed the world forever, and that was COVID. We weren't always FX1. We were originally called ActivePlace. We were originally in the participation sports market. We were helping people do marathons, triathlons, helping them book them, flights, etc. But COVID's terrible for that kind of stuff, right? It shut down everything. So we quickly pivoted, but pivots are expensive. Sometimes they are required, but they're super expensive. So we went through that, we pivoted, we eventually merged into professional sports, but we kept trying to find what is the market, what's the right thing that can get us product market fit, knowing that we had a vision to do something in sports and change sports. Going through 2020 through 2021, we would run out of money, we'd raise some more money. It wasn't a bear market at that point in time, so we were able to continue to raise money. But then we got to a point where again we're out of money. So it's this terrible drug that you're on, trying to raise money and trying to keep in the game and just trying to persist. So we get to January, and we had actually a good thing happen. And that was that I went and pitched at a startup conference in Sydney, Australia, where I'm from. And I won the pitch, and we met these investment bankers, right? Within a week, we had a term sheet, $3 million they're going to invest in us, right? We thought our problems are solved, this is going to work out for us. But then 4 months later, we're still in the deal, right? Within a week, we had a term sheet. Within 4 months down the track, we're still in due diligence. We're working out they weren't the right partner for us. They're trying to change our business. They were trying to be the CEO. They were trying to direct what we're doing, and we pulled the pin on the deal. That's when misery hit. We were out of money. We had a lot of money that was going to hit the bank. It didn't, and we were broke. And so, but we continued. We thought, you know what? We're this far in. We're going to keep at it. We're going to keep at it, and that's what we did. We ended up funding the business ourselves, putting our own money in, and just continuing. We then get to 2023, and we had a decision to make. It was April, about 8 months ago, and I'd been talking about cryptocurrency and blockchain technology to my co-founder for quite a while, saying that there's something we can do in this space. It's interesting technology. I originally got into buying Bitcoin in 2020. That's how I started my journey. And I knew there was something there for us, but I didn't know quite what. So I'd been doing some research and figured we could launch a token. And I thought, companies have done this, they've done it successfully, and I looked at market caps of tokens out there, and I thought we should do this. So I pitched it to my co-founder, and we had a choice. We had a company that was going to do a crowdfund for us, allow us to do a raise where people could invest as little as $100, and they would collect it all together into one line on the cap table for us, and that would allow us to go out to small investors. Or we could go down the crypto route. We went down the crypto route. And it was not just a good decision, but the best decision the company has ever made. Since going live with our token, before going live with our token, we generated not $1 in revenue. Since going live, we just ticked over $1 million in revenue for the business in what, like 8 months. It's over $20 million in trading volume on our token. So my talk is I'm here to tell you about what we did, how we did it, so that you can learn from it, whether you're launching a token or not. But I just thought it was an interesting thing to present and show. So, and just remember, this is my experience as someone that wasn't heavy into crypto. I've learned a lot over the last few years. But I come from more of a business perspective, a revenue perspective, and a growth perspective versus a technical perspective. Before I go further, the talks are not about the company, but I thought I needed to provide the context on what we're doing. So, as I mentioned, we merged into professional sports. We then decided on what we're going to do, and we're now a data and analytics company with a plan to move into betting in the future. We're doing AI computer vision. We get our models to watch sports, and we take down data from that live game. Some of the data that we collect is typical data. Some of it is new data. So we're starting with MMA and UFC. That's the sport we're starting with. We're collecting things like punches and kicks and how many are thrown, landed, that kind of stuff. But we're also introducing new things like speed and force of punches. So we're going to define our own significant strike. We're going to define our own speed for punches and track them and really present them in a new way with time-based charts and graphs that don't quite exist. We're going to do predictions analytics as well, and that's where the betting aspect comes in. So that's a bit about the company, but I'll move forward. So where to start? Okay, so there are some companies that shouldn't launch a token, there's some companies that shouldn't launch a token. So the closer your token can integrate into your product, the better it's going to be for you. You look at Bitcoin. Bitcoin's coin is integrated because miners get paid the coin to operate the blockchain. So it's tightly intertwined. The closer you can intertwine your coin into your business, the better. But saying that, if you can build a big business, you will likely also do very successful with a token launch because you just have a big business. You have a popular business. So that's the first thing. Second thing is, how do you make cash out of this? How do you actually generate money? Well, smart contracts have ability to collect tax. And so this is the route we went down. When you look at meme coins or shit coins, they typically charge zero tax. But what they'll do is to make money, they will dump a lot of their tokens on the market if the price rises. But we didn't want to do that. We're legitimate founders. We're running a legitimate company. So we decided to charge tax on our contract. So we set it at 5% tax. So we would collect 5% of all the volume that happened on the coin. Last thing is time required. This is not a overnight success. This takes time, effort, tears, sweat. It's hard work. Yes, I think it's a better route than the investment route because you're not giving up equity and you can generate real revenue doing this. We've done it. But you don't think this is overnight success. It's not. You're going to have to really put a lot into it and give it everything that you've got and really learn from the mistakes you make and continue and persist at it. But hopefully this will make it a little bit easier for you. So the topics of smart contracts, audits, and tokenomics. When you launch a token for the purpose of revenue, which is what we did, you need to choose a chain to launch it on. We went Ethereum. We were advised to go the Ethereum route because it's the most popular, it has the most volume. A lot of people hold ETH in their wallets because that's what they're going to swap your token with, right? So we chose the ETH route. We're happy with that. We think it worked out well for us, but you do have a lot of other options that you can go to, but it's something you do need to think about, which chain you're going to launch on. Once you know which chain you're going to launch on, you're going to write a smart contract. Smart contracts don't have a lot of data in them because they've got to be hosted on the chain and the chain can't have a lot of data. It's expensive. So the contracts are cheap and easy and it doesn't take a lot to launch one. You can launch one in an hour, in a day. But if you're doing it for a company and you want to do what we did, you want to put a little bit of thought into, does the contract need to be custom? What do you want it to do? And then figure out how to write it. But writing the contract and launching it is fairly cheap. That's not the hard bit. Tokenomics. So tokenomics is a very complicated area and you see a lot of people talk about it and I know a lot of people don't really know what it means. This is a typical tokenomics chart. It's not ours, but it's a typical chart you'll see that describes how the tokens are allocated. So when you launch a token, you will define how many tokens you want. And that could be 1, it could be 10 million, it could be any number you define, right? But usually there's some thought that goes into how many tokens do you want in the contract. The way I think about tokenomics that makes sense to me is that in a liquidity pool, you'll have a number of tokens inside the pool, and the tokens inside that pool can be bought and sold on the DEX. You'll then have a portion of tokens outside that pool which you reserve for yourself. And you reserve it for yourself for the purposes of team, marketing, private sale, etc., right? So you'll reserve these tokens for your benefit. You're either going to pay them to team members, raise money off the back of them. That's what that side portion of the tokens are for. The rest of it's going to be in the liquidity pool. You don't want too much in the side bit because what are you going to do with that tokens? You can sell them and dump the market and people don't like that. So we went with a 70-30 ratio. So 70% of our tokens are in liquidity, 30% are outside liquidity. And we've allocated them between team allocations, investor rounds, so seed and series A. We've thought about what we want to keep those tokens for so that we can try and benefit off them. Plus partnerships, I'll talk about partnerships in a bit, and we do use that allocation for certain partnerships as well. Auditing. So I know Anthony touched on audit. So you do need to get your contract audited before you launch it, and this is actually the expensive bit. The reason you need it audited is twofold. You want to know that your contract can't be hacked or easily hacked, and an auditing company will do that for you. They'll look at your contract and they'll tell you what's wrong with it and what you should fix and what are the risk levels on it. In addition to that, your community that you'll build, that I'll get to, will want to know that you've got an audit. They want to see an audit document, and that's why you'll sometimes see projects that link to the audit because it's proof that, hey, we got it audited. The problem with auditing is that it's expensive. You can pay, the minimum you'll probably pay is $5,000. You can pay up to 30, 40, 50K, depending on who's doing it for you. The reason, it's actually not a bad time to start an auditing company because there is so much work out there. The reason there is so much work out there is because most of it is from criminals. Criminals want their contracts audited, right? And so they take up a lot of this demand, and criminals drive up the price of audits, unfortunately. But you do need to get an audit. So once you get past that stuff, right, you've kind of got the mechanics, you know where you're launching. It's launch time, right? You're ready to launch the token, the contract. So one thing that's super important is the community. And this is something you cannot skip. You do not want to skip it because it brings much more benefit than just helping your token volume, which is, again, the purpose of what we're doing here. We're trying to create volume. So you typically will launch a community in a number of platforms. The main ones are Discord and Telegram. This is a screenshot of our community. So we have over 1,000 messages per day in that group. It's a lot. It's a lot for me to go through and scan through every day. But it's engaging, it's fun. People are talking about sports. We provide support in there. We answer anyone's questions. It's very open, welcoming. It's a buzzing, vibing community. We often get feedback on AMAs that we have one of the most vibing communities out there. And one of the reasons for that is because of the team we hired, and I'll talk about that in a second. But it's really, really important that you get a community built, because they will not only buy and sell your token, but they will bring friends in. They will talk about you. They will shill you. By shilling, they will go on Twitter and share posts and really fight for you. We have a lot of our community members that say we. It's not us or them, it's we. Like, we're going to do this. We're on killer whales. That this is the language that they talk, because they really do feel part of the project. So you've got to build a community. You can't do it too long before the token launch. I know that Anthony mentioned that there was months leading into it. There's so many token launches out there that traders get bored. They move on to the next thing. So you cannot be launching for months in this space. Like, it's literally a week or 2 weeks that you want to start announcing it. So it's a quick ramp up. You go live, and then it's really about extending it out past the launch date. Influencers and partnerships will be absolutely key to driving volume for your token, because there's only so many people that you're going to be able to draw into a community, and there's only so much that they can do for you. Apart from that, you have to go out there and partner with the right people. So we initially started partnering with people on X, on Twitter. We used a tool called Mainline that would allow us to sort different influencers and look at their following and see how big they were. And it was just trial and error. We would find someone that had followers, we would pay them some ETH, and then they would tweet us, right? They'd say, go buy FX1, or they would come across on a more story-based concept. They'd talk about the company and what we're doing. So we tried so many different influencers. Some worked really well, some didn't work at all, but we learned from each one that we did. We had spreadsheets, we tracked the revenue, we tracked what they did for us, and we tried to just do the best that we could. But it will be key. What we learned is that in the beginning, X is a great tool, but as you grow bigger, YouTube is a very, very, very powerful tool. We're partnered with a number of YouTubers with big communities, and they've gone in there and explaining our project, and that's really helped, not just for the token awareness, but for the business as well, where our signups are growing, our app downloads are growing, and it's all through these influencers. It's all through the right people talking about your project. When we started, we knew we needed some help, so we went to Upwork, and that's where we got our staff from. So we found a really gun marketing guy. So he's doing our video and audio, and he's from the Web3 space. We also found a really gun community manager who's from the Web3 space, who helps run that community. So he's got his finger on the pulse, making sure everything's running in there. We're in there as well, but he's there making sure that community is on point. It's all in check. Nothing bad is going on in there. And we found these guys on the internet. We are a distributed company. We do have a small office in San Diego, but we have employees in Australia, in the Philippines, in Pakistan, in Ukraine. We are really a distributed company that way, because I believe that's the future. I believe that's how you get the best talent. You can't restrict to a region. There are a lot of scammers out there. Oh my God, there's a lot of scammers. So these scammers will work so hard to defraud you that if they just put that effort into building a company or being an employee, they'd be a star employee. They'd be a star entrepreneur. We've had people spend weeks with us in conversation. We've had them get on calls with us with their video on. They turn out to be scammers. It is mind-blowing and scary with the lengths they will go to defraud you, and they're out there. So you need to be super diligent, because you can't call the Ethereum blockchain and say, hey, I sent a deposit, it's can I get it back? There's no refunds, right? Once you send that crypto, it's gone. So you need to be super diligent on who you're partnering with, and just double check everything before you do it. But sometimes you need to learn the hard way and get burnt, and sometimes that is the best lesson you can get, because it really does teach and ram home the lesson. Launch day is overrated. That's our launch day. In fact, it's not the launch day, it's like the launch month, right? That's a daily chart. So we went up and we went down. That is the picture of 99% of token launches, right? That's exactly what happens. People buy early and they just sell off, and it just dribbles down to usually nothing. And it goes sideways into nothing for a long time. We're not any company though. We were very passionate about what we're doing, and we knew we could fix it. So in this period, we were continuing to build a product. We were trying to partner with people. We were building a community. We were doing a lot of things to try and drive awareness to the project. That was taken 2 days ago, that chart. So that what you saw back there, that there is that stuff there at the bottom, right? It condenses. So this is the result of the hard work. Over 20 million in volume, $1 million in revenue for the company. It's changed us. It's not only has it given us the revenue, but the community we're built around is just amazing. Like they support us, they fight for us. We don't know where we would be without that community. And it's come just off the back of doing what we did and going in and launching a token. So that's the talk. In closing, I guess I would say that, you know, this industry I think is tarnished, and it's been tarnished because a lot of bad people have done the wrong things. Like Anthony talked about it. Like I was in the Celsius exchange, right? So I learned hard and fast what can happen in centralized exchanges, and not just centralized exchanges, but people doing the wrong thing. And so I believe there's a big future in this area, but I believe it's the traditional companies, the legitimate companies that are going to come and build and do things in the space to make it legitimate again. That's what we're trying to do in the space. We're trying to bring a Web 2 company into the Web 3 space and show that it can be done that way and it can survive that way. So that's what we're doing. Please check us out. They're my handles. We should be covering UFC 298 in a week. That's the first event we aim to be covering. Our app's free to download. You'll be able to get live stats on the fight as it progresses if you are, in fact, a fight fan. But otherwise, stay in touch, check us out, and I'd love to hear from you if you have any questions. Thank you.
I have 2 questions. One is super quick. Where's your accent from?
Australia.
Australia, okay.
Yeah.
The second question is, do you plan to cover the crypto influencer fight? It's going to be, has Adam Charles, who used to be the manager for Wendy O, BitBoy, pretty much every YouTube influencer out there, fighting Keith Berry, UFC person. And it's got BitBoy fighting the head of Harry Potter, Obama Samak Inu. It's got a bunch of influencers fighting each other that are really big. Do you plan to cover that one?
We're really focused on the UFC for now. It's like so challenging just to do the one league. It's consuming, it's intensive on the server. So we're starting with UFC and trying to focus there, but we do want to cover those fights. Absolutely, like that's in our future, but it's not probably right now.
I'll give you a card because I'm in a group with all those people. So
all right.
For next year, you can probably cover it.
Okay, cool.
I had a quick question. So you guys have built a large community and like gotten a lot of like token appreciation over the last couple months. Is that based off of marketing? Is that based off of the product itself? I'm kind of curious to see like how you guys are gonna justify like such a large market cap for a product that isn't revenue producing.
Yeah, it's a good question. So it's a mix of things. You know, like trust is one of them. People have to trust you. And once people trust you, they will trust that you're going to do the right thing. So we've built that trust with our community over the last 7 months. We've shown them we're here. We've shown them we do the right thing. We're not about to bail out of this. So I think one of it is building trust, but it's all of them. It's building your product. It's making advancements in what you're doing. It's marketing. It's awareness. You know, I've been involved in projects where I've bought the token and I go into the community and there's nothing being done. There's no marketing. There's no updates. There's no nothing. And so I've learned firsthand what I would like a project to do, and I've tried to bring that into our project to make sure that we're updating everyone, that we answer all the questions, and that we continue with the progress of our business. We write a Medium journal once a week. It's a diary, and that's been written now for the last 40 weeks. So we are continuing with that, and that we know the community appreciate that because it keeps them updated and it keeps us honest into what we're achieving and how we're progressing. But ask any of our community members and they'll see the progress that we've had, you know, from the day dot when they got involved to seeing the designs that we release. So when we get new designs, they're not going to be ready in product for like maybe a month, but we'll share those designs to show there's progress. Look, we're building designs, we're doing this, we're getting here, we're doing things, and they appreciate that. You know, you can see some companies raise money off DEX, right? So people can do amazing things with a vision and just an idea for what you want to do. So it's a mix of all the things, the marketing, the partnerships, the product, it's really about bringing all that together to try and create what we created. Yeah.
Can I ask another quick question? You mentioned that you guys were going into betting. We didn't really touch on the product too much, but I'm really curious to see like what the vision of the product is, especially as you go into like a betting market and how that could look with your prediction data.
Sure. Yeah. So we aim to be a peer-to-peer book. So we don't believe in the traditional book model. We want to be a peer-to-peer because that is focused on the users. Books want their users to lose money. So we are a more fair model, like blockchain technology is. And because we're providing predictions, so we're going to be providing predictions on who's going to win as the fight progresses, as well as on prop stats, like who's going to, the speed of the punch tally. So it's not just who wins and who loses, but a lot of micro prop bets we're going to introduce for the fact that we're going to be producing those analytics. We're going to kind of know through our data who we think is going to win. Our AI is going to know who's going to win. And that's why we want to offer that edge. We call it the FX1 edge. That's what we'll offer to the users. They'll be able to subscribe on that plan, and then they'll get recommended bets on what to bet on. So we'll tell them what to bet on. We'll do bet management for them. We aim to introduce safe betting options so that you can't bet more than a percentage of your account. So we have a gamification document that was done and delivered for us that will bring fun to the platform, like Anthony's platform. So we aim to do things a little bit different, but ultimately it will be a fun, engaging platform where you can either get analytics on sports as they happen, understand the game just a little bit better, banter with your friends, as well as place a wager if that's what you want to do, but do it in a fun, engaging way that's very, very different to the traditional betting platform out there.
Thank you.
No worries.
So the key question I really wanted to know is tokenomics. You mentioned that in Bitcoin, there's a reason for the token. It rewards the miners. They're incentivized. I don't think you covered, like, what's the purpose of the token that you issued? Like, why would someone want to acquire it? And then what can they do with it once it's acquired?
So in the beginning, it was the value in the company. What's the future value? Will this token grow in value, right? So that's why people are buying it. That's the utility really at the beginning. From there, we launched staking. So we now have a staking contract. And so we're now around 10% APY. That's the return our staking contract is providing. So that's a reason why you buy FX1, because you can now stake it and earn yield. When we launch our platform and get it going, it will be used as a payment provider on the platform. So you'll be able to pay in FX1. We want to lift the world of cryptocurrency. So we're going to allow payment by fiat currency and crypto, the top cryptocurrencies, including stablecoin. But if you use FX1 to buy services, you're going to get a discount versus if you're using another currency. So we aim to provide benefits for using the token in addition to the benefits that we already have, like such as staking. Yeah.
Can I ask a follow-on question?
Yeah.
I think you don't need that. It's like my
Or it's
board is
carried.
recording.
Oh, it's for the YouTube people. All right. So who's your chief compliance officer?
Compliance officer?
Yeah.
For the token, or?
Just generally for the company, not only for the token.
Yeah, so we don't have a chief compliance officer. Like we've partnered with the right people in order to get the contract ordered to do things right, but we're a small company. We don't have a chief compliance officer.
Okay. Do you do any geofencing?
Geofencing for the product?
No, for the token.
No.
No. All right. You know you're selling a security, right?
Sorry?
Here, you can't sell it because it's an unregistered security.
Yeah, I understand that.
Do you understand that, right?
Yeah, I understand that.
Well, that's up to the user.
Yeah.
No, it's not up to the users. It's completely not, because it's if you go through the Howey test, it's like they are hitting all the marks. The token doesn't necessarily have to be a security, right? It's the investment contract that is relevant. If you actually look at the federal appellate court ruling on Bitcoin ETFs, there's exactly that reasoning in there. So if you do not have an entity that is actually actively promoting the coin, and the coin lives on by itself, then it's not. If there is, welcome to the world of unregistered securities. So that's just how it rolls.
That only would really affect the event on launching the central exchange within the US.
No. Sorry.
I would just
Sorry.
jump
No,
in
but
here
no,
and
it's
say that you are right, you have a point. But startups, if you've ever built a startup, you will know that sometimes you have to break rules to get going, right? Look what Uber did. They broke a ton of rules in the way that they built that
Kalanick
business,
is
right?
one of the greatest assholes I know.
So I get what you're saying, but sometimes you need to break some rules, right? If we were to follow every single regulation, like half the startups that are the big startups these days wouldn't even be around, right? So I get what you're saying, but there are a lot of companies out there with crypto tokens. The Howey test is it true? Is it not? That, you know, but we're partnering with Fenwick lawyers. We've got good legal representation, right?
So it's
we know
like
we know what we're
Supreme Court
doing.
precedent. So it's like there's no sense in arguing with the SEC, and
Are you from the SEC?
huh?
Sounds like it.
All right, I want to bring it back. Do you have any
So
other
the point is like
questions?
it's like I earn my living of helping people not to go to jail.
Okay.
That's what I do
All right.
primarily.
All right.
Maybe not call them out on YouTube then if
Yeah.
He's not my client, so I don't care.
No.
It's like but the truth of the matter is, right? It's like there are ways how to do things in a compliant manner, also on chain, right? In a privacy preserving manner. It's just people are too lazy to actually want to do it. That's very simple because it's about making the quick buck. You're doing the right thing. You want to earn it, right?
Oh,
I
we've earned it.
applaud you. No, I applaud you, right? It's like I still ask. It's like, why do you need the token? The business is good as it is without a token, in my opinion.
Yeah, you can. That's your opinion. That's fine.
Any other questions for the speaker?
I have a couple questions. What's the market cap of the coin right now?
We're sitting around $18 million market cap.
Okay, and then do you know if the contracts were announced at the moment?
Sorry,
Do you know if the contracts were announced? Like, do you guys still have control to like adapt it and stuff?
we have control of it.
Okay, cool. So do you guys have a plan to reduce the 5% tax as your market cap goes up?
We do.
You do? Okay, cool. You're gonna reduce it to 0 or like 1?
Eventually, yeah. Once we start making money on the platform, and once we start generating fiat currency and cryptocurrency through our platform, we're going to reduce it down. So yeah,
Okay, cool.
there's definitely a plan for that. We know we can't keep it where it is forever. We know the community wants to see it lower. So yeah, man, it's in the plan.
Awesome.
All right, I'm going to take one more question, and then at the end of this, I want to do a lightning round. So if you are working on something, if you're hiring, if you're looking for partners, go ahead and start making a line over here. We'll give you 60 seconds to kind of tell everybody what you're doing. And one last question for Trent.
Yeah, I was kind of just curious what like your listing strategy was for the token when you were like considering like central exchanges, decentralized exchanges. Like, what was kind of like the distribution strategy?
Yeah, so we don't really, we do have an allocation there for centralized exchanges, but we know we can't make tax revenue off centralized exchanges, right? It's all on the DEX where you make that revenue from. So the plan was and is to stay with DEXs for as long as we possibly can. We do realize that at some point we will want to strategically list on centralized exchanges, and we do have tokens allocated for that. But it's really not a focus for us because it will drive the price of the token up, but it's not going to generate tax revenue for us, which is our purpose and goal for doing this in the first place. So it's there, but it's not what we're worried about right now. It's when I think maybe in 6 months' time, 12 months' time, that conversation will become more real, and we will strategically think about who we want to list with.
All right. Trent, thank you so much.
Thank
Appreciate your
you.
time.
Thanks. Thank you.
All right. Like I said, we're going to do a quick lightning round. If you are hiring, maybe looking for clients, starting a meetup group, anything like that, come on up. We'll get started with Morgan. And also say your name and how people can connect with you.
Hello, my name is Morgan. I work on QA here at Edge, and I am also a mycologist. I work on mushrooms. And I want everyone to know, as the vice president of the San Diego Mycological Society at Balboa Park, we're having Fungi Fair on February 18th at Balboa Park. We're going to have a whole plethora of mad science about fungi and mushrooms and mold and yeasts. And we're also going to have art and vendors. And it's our annual event to teach people about the wonderful world of fungi and mushrooms. So if you're, getting bored with looking at your charts, you come outside and hang out with some outside nature people. And so I'd encourage everyone to come Balboa Park, February 18th. It's free. And yeah, so San Diego Mycological Society has a website, sdmyco.org. And we also have, like, the Instagram and the Twitter and the Facebook and all that stuff. But it's $25 a year to become a member, to hang out with mushroom people. And we go foraging for mushrooms every month. So it's like adult field trips. So if you need some outside friends, come check us out.
Hello. Okay, cool. My name's Tyler Miller, and I actually am the social media manager for Superverse DAO. The company's technically Super Studios, but so I work for Elio Trades. He's like one of the most popular crypto YouTubers, and he's like partners with Alex Becker. So some of the projects are like Neo Tokyo, Super Imposters for the game and stuff. And I just wanted to come out here and meet you guys, and I wanted to also let you know that I'm creating 2 projects myself. And I previously did a project in 2021. We raised $50,000 at a $250,000 valuation to do a gaming project, which didn't end up like sufficing how we wanted. We did a free minted out, and then when we tried to do the paid one, didn't work out so well because this was July 2022, and ETH was like $900, so probably the worst time ever to do something. But now I'm working on a new GambleFi on Metis. I don't know if everyone's familiar with Metis. I think it's going to pull a Polygon run this bull run. So we're making a GambleFi project on Metis, and we're in the middle of a friends and family seed round. So if anyone's interested, you guys can talk to me after. And then I'm also making an AI mental health app, and I'm going to integrate Web3 in there as well. Not raising for that at the moment, but just the Metis project at the moment. So if you guys want to connect with me, also I'm VZYN NFT on Twitter, and I'm also on LinkedIn and stuff, so yeah.
All right. Okay, I have Solana. For anyone who makes a new Edge account tonight, come find me. I'll give you $5 in Solana. I know they had an outage. I think they're up and running on the 6th, so they're good now. So yeah, if you make a new Edge account, all you need is your username and password. Takes a couple seconds. I'll go ahead and send you some Solana. Other than that, our next meetup in the office is on February 28th. It's a CTO talk. It's a different group. It's a group called CTO Talks. They're going to be hosting an event here. So once again, thanks to our speakers. Thanks to our volunteers, Andrew, Ross, Daniel, Morgan. Shout out Paul. Shout out Chris. All right. Thank you guys. Have a great night. Go eat some food and drink some drinks. Yes. Same time, same place. Thursday.